Hello everybody, Joshua Hayes here at BigWaveTrading.com with the overall stock market analysis following Monday's session. The good news is that the Russell 2000 did bounce. Bad news is there was really no volume behind it. My long scans, while they were a bit heavier than they were last week, my short scans were nearly just as heavy. The good news is that I flagged more long positions this time around than I flagged short positions. But overall, there's no real clarity to the upside or downside. Another positive is that I've had some partial sell stops and full sell stops hit lately on leading stocks. Those stocks have reversed and moved back higher, which is always a sign of a healthy pullback and not a start of a crash and or major correction. Also, we are now out of the month of October, and we're moving into November and December. And I'll repeat, since going back to my data to 1869, I cannot find a significant stock market crash in November, December. So we're in the clear historically and seasonally. We're in the two of the three most bullish months of the year. So hopefully we can maybe chop around here into the election, find a floor, and then begin to rally higher. But either way, I would expect more chop before any clear trend one way or the other. But the IWM, Russell 2000, good start, good bounce. The NASDAQ 100, not down that much. Volume was lower than the session before, but still not a good session. Open strong, closed weak. Same pattern we've been seeing since September 9th, and even before then, the inability to close near the highs. The NASDAQ pulled back only 0.2%, lower volume, but once again, not a good session. But October, what are you going to do? The Dow Jones Industrial Average, down 0.10%, heavier volume, still has that rollover look, can't get above the 50-day moving average after September 9th, can't close strong at all since here, what was this day? 10-11, and here we are trying to roll over again. Same can be seen in the NYSE, though it was up today, still it's kind of like a reverse churning day. And the S&P 500, same similar situation. Looks like it wants to roll over on heavier volume, but we're still holding those recent October lows and even the September lows. So if we can hold here, chop around a bit, maybe after the election is over, we can start to rally again and or crash. Well, either way, I'll take it either way. I'm prepared for everything. And our own operation and my personal trading, I have no new hedge signals, but at the same time, zero quality long signals. I'll go ahead and show everybody one of the better ones I was looking at was CWEI. This is in our perfect speculator scan that looks for the best of the best high quality, high price stocks. Look good, kind of looks like, hey, we could play a bounce play. Not a big position because it's not symmetrical to its previous uptrend. 200-day moving average is far away, meaning it's a riskier long position. But it's all for naught because I believe earnings are on the 2nd or the 3rd, so there's a no-go there. So for right now, our market models remain under a operational sell signal across the board. The market still looks weak, but it doesn't look weak enough to think that, oh yeah, we're definitely going to roll over here. We just have the look of a market that still wants to continue to roll over. But with those lows still holding October, September, that 200-day moving average coming up, we have a lot of areas of support that could work in our favor. So we'll go ahead and see. All right, everybody. Have a great rest of your Monday. I'll see you back here on Tuesday.